Nigerian deficit is expected to rise to 4.7% of gross domestic product in 2025, according to the latest International Monetary Fund report. This projection signals persistent fiscal challenges despite the government's continued reform aimed at improving economic stability. Welcome to Business Point, where we extract the Nigerian economy and the government policies. I am Kike Lomo Okere. The projected rise in the deficit by the International Monetary Fund is largely attributed to the combination of reduced oil revenues and rising government expenditure, which could threaten Nigerian fiscal sustainability if not managed effectively. According to the IMF report, in the baseline staff project, a consolidated fiscal deficit of 4.7% of GDP in 2025. This is higher than the budget owing to lower oil price and production, and already reflects lower than budgeted capital expenditure of 4.1% budget deficit recorded in 2024. In 2024, Nigeria managed to bring down its fiscal deficit to 4.1% of GDP from 4.8% in 2023, largely due to stronger revenue collection supported by exchange rate depreciation, inflation, and administrative efforts. However, the country's fiscal deficit for 2025 is projected to surpass initial budgetary expectation due to ongoing global oil price volatility and challenges in domestic revenue generation. The IMF staff report highlights that although Nigeria has made strides in increasing non-oil revenue through tax reforms, the oil sector performance continues to undermine fiscal stability. The 2025 budget was based on optimistic assumptions regarding oil revenue, but with the recent downturn in oil price and lower than expected production, the fiscal gap has widened. Consequently, the government's ability to meet its budgetary targets has been compromised, especially as expenditure, particularly capital spending, is set to exceed the country's fiscal capacity. With global economic conditions remain unpredictable, the need for recalibrating fiscal policies is increasingly urgent. A significant part of Nigerian fiscal strategy is aimed on fuel subsidy savings, which could contribute up to 2% of GDP in 2025. Provided these savings are fully realized, the IMF also suggests that government should intensify its domestic revenue mobilization efforts, especially through the full implementation of its ongoing tax reform. The reform to modernize the value-added tax and company income tax system are expected to improve tax compliance and expand the tax base, offering a sustainable solution to Nigerian fiscal challenges in the long term. In fiscal stability. The ECOWAS Bank for Investment and Development have approved $100 million in the funding for the construction of 47.7-kilometer stretch of Nigerian Lagos-Calabar Coastal Highway. This segment, designated as Section 1, Phase 1 of the project, starts from Ahmadu Bello Way in Lagos. Construction began in March 2024 and is being executed by I-Tech Construction Company Limited. The approval was part of a broader round of commitment announced during IBID 92nd Ordinary Session held in Lagos, where the bank disclosed that it had allocated a total of £174 million We sincerely apologize for that break. It was due to technical issue. Moving on, ECOWAS Bank Development says the Lagos-Calabar Way funding is intended to enhance access across 9 Nigerian states, improving connectivity to seaports and remote agro-industry zones, and facilitate more efficient movement of goods and services along the Southern Economic Corridor. The project is also expected to help develop a regional value chain that supports the livelihood of coastal community. The bank also approved $100 million funding for Lagos-Calabar Coastal Motorway project in the Federal Republic of Nigeria. Other approved projects include £50 million investment for the construction and equipping of 6 technical and vocational education systems in Togo, aimed at training 3,480 youths annually in high-demand skills. In Guinea, IBID committed £28.9 million to modernize 4 agricultural high schools, an additional £95.16 million for construction of 3 hydroelectric micropower stations with a combined capacity of 30 megawatts, targeted at improving renewable energy access in the rural area. In Cote d'Ivoire, $25 million was approved to support clinker imports by Société de Cement Cote d'Ivoire to boost cement production and ease material shortage in the construction sector. The bank noted that the investment aligned with several United Nations Sustainable Development Goals, particularly SDG 9, industry, innovation, and infrastructure. With this latest round of approval, IBID total financial commitments in West Africa have now exceeded $5 billion. Recall that the Minister of Works, David Umahi, recently disclosed the federal government contract worth over 3 trillion naira for section of Lagos-Calabar Coastal Highway spanning Lagos, Akwa Ibom, and Cross River State. Section 1, which began in Lagos, was procured at 1.068 trillion naira, with 30% of the contract sum already disbursed. Section 2, which includes several flyovers and crosses swampy terrain linking to Dangote Refinery, was awarded at 1.6 trillion naira. Additionally, Section 3A and 3B, covering the Akwa Ibom and Cross River segments, were jointly procured at 1.3 had in May 2025 commissioned the first completed section of the Lagos-Calabar Coastal Highway. The National Insurance Commission has formally issued operational license to Salma Alliance Life Insurance and General Insurance, marking a significant milestone in Nigerian evolving insurance landscape. The official handover ceremony took place at NICOM headquarters in Abuja, attended by top regulatory officials and representatives of the new licensed entity. Presenting the license, Commissioner for Insurance Olusegun Omoseyin reiterated the Commission's commitment to creating an enabling environment for insurers to thrive while safeguarding regulatory integrity and policyholders' interests. He noted that strengthening this pillar was key to restoring public confidence in the industry and driving deeper penetration in the Nigerian insurance market, which remains undeserved. Omoseyin also affirmed the Commission's resolve to eliminate unnecessary bureaucratic orders that constrain operational efficiency, adding that NICOM was evolving towards smarter, more responsive regulations. The licensing comes on the heels of a major merger between Salam, a leading South African non-banking financial service provider, and Allianz, a global insurance power headquarters in Germany. The resulting entity, Salam Alliance, formally launched its operation in Nigeria last month. Omoseyin expressed confidence that the new brand would contribute significantly to Nigerian insurance ecosystem, citing its international pedigree, diverse product, and deep capital base. The merger behind Salam is a strategic move that enhances capacity, strengthens market competitiveness, and introduces world-class practice in the sector. The combined footprint of Salam and Allianz now spans 27 African countries, including Kenya, Egypt, Ghana, and Uganda, reinforcing their shared vision of delivering robust insurance and financial service across the continent. With this initiative, the Nigerian insurance industry is experiencing significant growth, with projection indicating a market size of $7.84 billion in 2025. The industry has impacted by the Naira devaluation, resulting in higher premium for foreign currency denominated policies, particularly in the oil and gas sector. Insurance penetration in Nigeria remains low at less than 1% of the GDP, but the industry is actively working to increase awareness and accessibility. Apart from the Salam Alliance, other global insurance brands such as AXA, Massad, Prudential Life Insurance, and others are thriving in Nigeria. All right, let's take a quick short break. We will be right back. Don't go away. Stay with us. Welcome back. If you're just joining us, this is Business Point, where we x-ray the Nigerian economy and the government policies. The Nigerian Customs Service Tinkan Island Port Command says it has generated 747.07 billion naira in revenue between January and June 2025, marking a 29.85% increase compared to the 575.36 billion naira it recorded during the same period in 2024. This performance represents a 171.72 billion naira surplus and a 98.03% achievement of the command's half-year revenue targets. The announcement was made in a statement released by the Custom Area Controller Frank Onyeka in Lagos. According to the command, the figure represents a remarkable surplus of 171 billion naira, 719,786,500 3,247.68 naira when compared to the 575.36 billion naira realized in the same period of 2024. The figure represents a 29.85% increase compared to the previous year and reflects of 98.03% performance against the command's expected target for the period. Providing further insight into the command's performance in the first half of 2025, Onyeka noted that monthly collection consistently surpassed both projection and previous year's figure. In January, the command generated 116.41 billion naira compared to 88.43 billion naira in January 2024. February followed with 103.25 billion naira compared to the previous year, which is 100.25 billion naira, while March recorded 128.27 billion naira from 115.11 billion naira. In April, collection rose to 145.02 billion naira from 95.70 billion naira. May brought in 128.4 billion naira from 92.67 billion naira, and June closed the period with 125.68 billion naira, up from 83.19 billion naira. The Custom Area Controller of Tinkan Island Port Command attributed the improved performance to the deployment of new Bodogu clearance system, which processed 3,450 single goods declaration and successfully exited 2,749 entries within the period. He also cited several stakeholders training sessions, both online and in person, aimed at enhancing operational efficiency. During the first quarter, the command received 282 vessels with bulk imports including wheat, sugar, rice, malt, laboratory chemicals, drilling rods, and general cargo. Beyond revenue generation, the command stepped up its security efforts. It handed over illicit drugs valued at over 8.05 billion naira to the National Drug Law Enforcement Agency. He noted that it also intercepted a container loaded with arms and ammunition, including pistol, magazine, live and blank round, and other military equipment. The item and suspects were transferred to the Department of State Service for further investigation. Controller Onyeka reaffirmed the command's commitment to strengthening nation's revenue, safeguarding Nigeria's border, and ensuring efficient trade facilitation at one of the country's busiest ports. Let's move to Nigerian Stock Exchange. The Nigerian Stock Exchange market closed higher on Thursday, July 3rd, with the all-share index adding 637.30 points to settle at 120,977.20 points. This marks a 0.53 points gain from the previous close of 120,339.90 points. Despite a slowdown in trading activities, daily market volume declined to 933.4 million shares compared to 1.0 billion shares exchanged the previous day. Seplat post 13.5 billion naira in trade as all share index highs 121,000 level. Mid-cap stock shine. The Nigerian stock markets closed higher on Thursday, July 3rd, with all share index adding 637.30 points to settle at 120,977.20 points. This marks a 0.53% gain from the previous close of 120,339.9 points. Despite a slowdown in trading activities, daily market declined to 933.4 million shares compared to 1.0 1.0 billion shares exchanged the previous day. Nevertheless, market capitalization rose sharply to 76.5 trillion naira across 24,207 deals, maintaining a firm hold above the 76 trillion naira mark. Top gainer include Guinea, Deadcap, Berger Academy, and each noting a 10% advance. On the flip side, Nyment and Legend Internet led the loser charts, shedding 8.49% and 7.98% respectively. Univis, Shaw, and Access Corp emerged as the day's most actively traded stock by volume. Daily market volume moderates to 933 million shares, down from 1.04 billion naira recorded in the previous session. Alright, this is where we draw the curtain on Business Point today. Join me again on Monday on Global Television, channel 365 on DSTV and 276 on Star Times. Kindly follow us on all our social media handles at Global TV NG. Till I come your way again, I am Kike Lomo Okeri. I celebrate you all.